Can you reduce the audio? Can you reduce the audio? Okay. Okay, hi guys, so welcome to this Facebook Live. Thanks very much for tuning in. We are of course coming to you from our newsroom in Mumbai to get you some perspective on the markets and answer some of your queries that you may have on individual sectors as well as the markets at large. So today's day, if I were to sum up, was fairly interesting because TCS entered the $100 billion market cap club. It's the 64th company in the world to be worth $100 billion in market cap. And not just that, it's one of the most valued companies in India currently. What is most interesting is the journey that TCS has charted through the last 13 years since it has been in the listed domain. 2004 is when the company got listed, and 2017, almost 13 years hence, it's raced past everybody to become one of the most influential companies in India. More importantly, a company that is offering leadership to the Indian IT outsourcing industry, become the poster boy, really, a key representative of where the industry stands today. So that's TCS in the session today. Remember, I was telling you about how CLSA has put out a price target of 3,700 on TCS. But most of the other brokerages, their price targets after their earnings call for Q4 have already been met at 3,400, 3,450. The move started at whereabouts 3,100, 3,150. So those $300 have already been made on TCS, and which is why we saw some intraday profit taking. So yes, it went past the $100 billion mark, but then retraced a bit to close the action day in the red. And that was the case with the entire IT sector. Some bit of profit taking came in after what the sector witnessed through all of last week. Selectively, then you also had OMCs which were in focus, and there was a bit of a bounce back in OMCs today. But that would be more technical in nature. So it's not like people were buying OMCs thinking, investors were buying OMCs thinking that there's a turnaround in the works. I think there's still concerns about rising oil prices and how the burden would be taken by OMCs. Whether or not they would be able to pass on the prices to the end consumers. But today there was a bit of a bounce back and some green on the screen. IndusInd Bank, surprise, was the top gainer on the Nifty. And if I could just have my colleague help me with questions streaming in for this Facebook Live, that would be great. Just have Swati come and stream in with the questions, that would be great. I also wanted to talk about the fact that some of the other highlights in the session included traction in pharma. In fits and starts, pharmaceuticals as a pack is seeing traction. How do we know that? Well, IT has come back from an oversold zone, and it seems like pharma also could be making a comeback. Now, the news flow has not improved on pharma as we know it. They're still having issues on the US FDA side. But it's interesting to see how things are shaping up from a technical perspective for a lot of pharma stocks. I was talking to Kunal Bothra, and he was highlighting that if fundamentals came through positively on pharmaceutical companies, then we would see some traction building in for the pharma sector. Okay, questions coming in. Why am I not surprised? The first one being from Ambi Shiva. After the big high, TCS could not hold on high rates. That's true, Ambi. I mean, it came off from the day's highs, but that doesn't take away from the story. It's a big story. You have one of the first companies in India hitting the $100 billion mark. Given what they did in the erstwhile bull market to now, in 2006, I think their profits were close to 3,000 crores. Today, their profits are six-fold higher, close to about 25,000 crores. So, things have changed in a meaningful manner for TCS. They've completely gotten re-rated. Just the fact that they started off on a high and closed on a low should not take away from the encouragement that this signals for the Indian industry at large and for the Indian IT sector per se. So I think it's not about a company leadership, it's also a proud moment for how the Indian market is maturing and companies in India are growing. I mean, we're talking about Apple chasing the $1 trillion market cap level, right, at $850 billion right now. So it's chasing that $1 trillion level, and it's only a matter of time as it goes, goes past that mark, that earnings flow and revival will follow through. So I'm saying that back home in India as well, we need to at least acknowledge that a company from the Indian IT outsourcing space has made it to that level and has created enormous wealth for investors across the board. Okay. Ashwin Mehta has asked about Lemon Tree Hotels. Ashwin, it's interesting you asked me about hotels per se. Lemon Tree, as I've told you in the past, I think I've taken a question on Lemon Tree earlier as well. They are across the value chain, so that works for them. But also what is working for the business is not just the fact that they are well integrated. It's also the fact that hotels as a business is seeing traction. And you would remember last week, Indian hotels, Taj, GVK, all of these stocks were raging ahead with double-digit gains. So there's been a fair amount of traction as we see in the hotels business. And I think part of it comes in, we also did a discussion on this to understand better how things are changing on the ground. And it's really, the end consumers' aspirational habits where people are taking weekends off and parking themselves, even in cities, their getaways are really a weekend parked in a hotel or booked in a hotel, and I think that sort of pattern change in consumer behavior is helping the hotels business. So their occupancy levels are going up, their rack rates, which are the room rates, average room rates are going up, and even if somebody was to say that it's seen as a proxy real estate model because rentals are high, well, I think, and also debt levels are high for a lot of these businesses, I think that also is those concerns are also easing off or coming to rest on the back of the fact that a lot of these hotel businesses are seeing increased cash flows. So, that should be kept in mind, and I think that's the rub-off that we're seeing in Lemon Tree Hotels. They had a decent listing, remember, and from there on, the hotel sector has really been seeing a lot of traction. I can't talk about stocks to buy, but do keep watching 80 now from 8 to 4. Our technical guests and our fundamental guests have a lot of house views and can give you a couple of strategies that you can benefit from technically also, and from a fundamental point of view. Conviction calls are shared on the channel all day long. So, take your pick whenever you tune into ED now. You can get ideas on how you can look at the markets currently. Abhishek has asked about Ashok Leyland from a short-term perspective. Again, the stock is telling the story, which is basically CV cycle revival, and now at about 150, you're seeing that traction build up. Remember, CV cycles run into multi-years, so it's not just a one-year phenomenon, it's something that plays out over a period of time. So having said that, if you are seeing a meaningful revival in CV demand, that it's not going to stop in 12 months. It's something that will play out for a couple of years. That's how typically, it's like a commodity cycle. It goes into a few years before tiring out. Rajashish has asked about M&M. M&M, I think the story over there that would be really strong is, and this is, again, I'm citing the CLSA report, is what they do with the rural business, what they do with the revamping of the utility vehicle segment, which was really their baby about 10 years back, and how they combat competition, because Maruti is also getting into that space, and we know what Maruti's been able to do with each of its segment offerings, having a market share of 57% now. So M&M has to combat that, but what's really working for them is their rural side of the business, and the fact that it also entails the sum of part valuations of all the other group companies, so whether it's M&M Financial Services, Tech Mahindra. So it's really SOTP which is working for M&M as a company, and primarily they focus on the rural side, which one needs to evaluate as to how that will play up in terms of earnings potential going forward. The market seems to be a bit bullish, and that's what the CLSA report is citing. Anand, that's an interesting question. Why is HDFC in the minus even though it made good profit? And I'm talking about HDFC Bank. HDFC Bank doesn't cease to disappoint investors. Yes, it made decent profits, but look at where it's priced, Anand. We're looking at almost 5 times price to book on a forward basis coming in on HDFC Bank. That's steep, that's expensive. So the market, also has to evaluate where they can generate those extraordinary returns. If one, and HDFC Bank, mind you, is in a lot of institutional portfolios. HDFC Bank will bring up any large cap portfolio that has sizable exposure to the banking sector. Among some of the top 5 mutual fund houses, any of their large cap portfolios would house an HDFC Bank and would have a sizable exposure to the business. But the fact is that if one is looking at an opportunity to beat the market, HDFC Bank is seen more as a bond, an investment there, because it's so consistent in its returns as well. It's a compounding story, as we typically call it in the markets. If you really want to generate alpha or an outperformance or that big margin of premium on returns, then perhaps the market believes there could be other undervalued opportunities where one has not seen the full potential being explored. Having said that, I think today's performance, you just can't measure it on a day-on-day basis. I think the market is pretty used to seeing HDFC Bank perform, HDFC in fact also perform, and so it took it in its stride. I think today the broad wave of interest was really with pharma, with IT, with OMC, some of the oversold names. So that is just the nature of the market in today's session. That was the broad trend in the market in today's session. Anjan, I can't advise on particular stocks, but I can only say that when somebody gets stuck in a stock, there are two ways of looking at it. Sandeep Sabharwal, who's a fundamental guest, highlighted that. He says either you wait for a bounce back and a meaningful bounce back, average your losses and get out, or you actually cut your losses and get out. As tragic as it sounds, as painful as it sounds, because there is hard-earned money parked in these businesses which have disappointed as investments, but that's a risk that comes along with investing in equity markets. There's a fair amount of volatility. The fact is, either there is some patience, because at any oversold point, and I'm not talking about Amtech Auto, I'm talking about across the board, any stock which goes into a downward spiral, we've seen many in the past, whether it was Reliance Communications or J. Prakash Associates, one has to just wait for a bounce back, a technical bounce back when it gets into an oversold zone, to reduce the losses suffered and exit at a decent point. However, if that doesn't come by, sometimes the loss, the severity of the fall can really unnerve investors such as yourself. Then you have to be a brave heart and cut your losses. However, this is a decision that you need to discuss with your financial advisor. Watch ED Now, hear our experts and get their perspective as well to understand what's the best way moving forward, because I do empathize with you. I mean, nobody wants to be stuck in a bad investment, but the way out of it is also requires some bit of thought, some bit of understanding, and some bit of patience, if I may say, to really evaluate how you need to manage your losses. So the best person to advise you would be experts, market experts or financial advisors. But this is a catch-22, and what I offered to indicate to you as a suggestion was something that Sandeep Sabharwal had spoken about, who's a fundamental guest, had spoken about on the channel earlier on. What about commodities and even oil? Vishnu, it seems like from the sound bites that we're gathering that oil could be rising from here. If OPEC cuts back on supplies, and that would put added pressure on prices to move higher. You're already hearing about how Saudi Arabia with its Aramco IPOs talking about $80 to a barrel. Not just that, there are sound bites coming in from OPEC nations, the oil producing nations essentially, talking about how they would be quite happy with $100 per barrel reality on oil prices. You also heard President Donald Trump's most recent tweet, talking about how he just doesn't like this cartel manipulation of oil prices, this cartelization in oil prices that the Middle Eastern countries indulge in, and he was talking about their being at it again, and he obviously doesn't like the whole idea because it puts a lot of pressure on inflation for a lot of economies, especially for an oil importing nation like India. It's not good news. So we'll have to wait and watch out for how things play out. But the sound bites indicate as of now that oil could be on the rise, much to the dismay of the world economy, for emerging markets. And like I said, even for the US, President Trump has tweeted he's not going to be happy about an oil at $100 to a barrel. With that, I'm completely out of time. Thanks very much for joining in. I'll catch you as always tomorrow at 4 p.m. To address your queries once again. Till then, keep watching Heaty Now all day long to get the best insights on the markets.